Alrighty, welcome traders. It is Wednesday, January 17th, 2024. Good day in the market for us. Not a great day in the market for the markets, but we had another great day. We're going to talk about that. We're going to get into some philosophies on trading here as well today. So let's join us for the ride here. First thing I want to do is just jump in quickly to the markets, take a quick look at where things were. Again, nightly review of markets, giving me a sense of what's going on so that I can plan for tomorrow. S&P was down 26 bucks. It was down up over $40 at one point, came all the way back, finished off of its lows of the session near the highs of the day, really. So good day overall for the market structure, I think. If we take a look quick here at SPY, you can see that we dropped and dipped below the 21 EMA, but then managed to stay above it and close above it. Good sign. We still have a bullish PSR signal. We got close to touching it and reversing it. Hasn't happened yet. Doesn't mean it will or won't happen. We'll really have to wait now to see what tomorrow brings. Do we break the 21 now, which could trigger then the next down move towards the 50-day purple moving average here? Is that next? I mean, there's some support and other things in here, but I think that's what I would be looking for. One of the things I think that stands out to me the most is if I'm looking at RSI here, as this market was moving up and hitting new highs, I've already pointed it out a bit to you, so you've already seen this, but RSI has been falling and diverging. It was not moving higher with the markets, telling you that, there's been some selling potentially coming. How big is the sell-off going to be? How much damage is there? I don't know. There wasn't a lot of damage today. It was down 0.5%. So we'll see when we start talking about, 1-2% moves in a day and some major sell-offs, then we'll start to figure out what needs to be done. But right now, market's a little top-heavy. We've been talking about it. I've been telling you about it. Yesterday's video was all about bearish signals everywhere. Still exist. There's no new bullish signals anywhere. So if you're not prepared for any kind of a sell-off, you need to be. And we're going to talk about that in a little bit. So anyway, there's where we are on SPY. MACD starting to fall a little bit more. RSI has been falling. It's in a downward trend here. That's a bearish sign. And even on the weekly here, MACD and RSI are falling, a bearish sign. Taking a look at the Qs, pretty much the exact same thing. We saw RSI dropping here. So RSI continues to fall. It hasn't reached the 50 yet. So again, we haven't accelerated. We could still have a decent turnaround and move higher. We did break the 9 EMA, and briefly broke the 21, but then finished it all the way back up over the 21, close to the 9 moving average, still in a bullish PSR signal. So right now, we're above the 21. We're bullish. 21's moving higher, the 9's moving higher, the 50's moving higher, the 200's moving higher. You are in a bullish trend until something manages to change here. I'm going to take myself off the screen so you can see what I'm talking about in case it's blocking it a bit. But there's where we are on the Q. So tech stocks looking pretty decent. IWM gap down on the session. Now it did close off its lows, but it's still down on the day, decently down 0.71%. MACD and RSI continue to fall. This still looks as bearish as anything out there. Now, as opposed to the Qs and potentially SPY, where we look at, the 50, the 200, and the 21 all moving higher, and we're above all of those, that is not the case on IWM here. You are on the daily, you've broken below the 9, which is now crossed and broke below the 21. That's a pretty bearish sign. You're hanging on to the 50-day exponential moving average, and you're above the 200. So right now, a pretty good pullback, pretty bearish looking setup right now on IWM. We are nowhere near oversold. We have not even broken the 50 here. I think small stocks, I know Tom Lee is out there saying it's the year for small stocks and get long. I think if you got long on small stocks at the beginning of the year, you're not too happy with what's going on. You're going to get smoked in here. So I think small caps don't look too pleasant in here, and we'll see how bad things potentially get in the small caps. 50-day Stocks above their 50-day moving average. I've been telling you about this and telling you about this and telling you about this for weeks. I've been telling you that when it hits 90, we typically reverse and see a bit of a sell-off. It happened 2 weeks ago, and we've been moving lower since then. So warning signs are there. We're telling you it's bearish. I hope you heeded it and put some hedges or make sure your buying power's in a good range. I'm not saying the sky is falling. I'm telling you we're in a bit of a oversold or overbought environment, and things are reversing on us a bit. Doesn't mean it's not another great buying opportunity right around the corner. All right, put call ratio did climb significantly today. So a big up move, one of the biggest that we've seen. And when I get into that put call ratio here, that move today really dragging this up. The higher this goes, the lower the market goes. And right now we are in a pretty solid uptrend on the 10 moving average. So the 10 days, just simple moving average. As this moves higher, the market will move lower. And that's what we're seeing right now. And a big spike up today, a lot of puts being traded. So puts outpacing calls by a pretty massive amount. So people starting to put some production on and buying some puts out there. Big spike in put buying today. And you can see that just jamming this 10-day moving average higher, which is bearish for the markets. Taking a look at the VIX. Let's get into the VIX here. It popped up today, so nice volatility increase on the session. Markets moving higher. MACD, RSI moving higher. Volatility increasing up to 1479, so pretty good 7% move on volatility today. Good stuff for us premium sellers. Great to see that volatility, which is going to help our theta out quite a bit. So good stuff for us. The US dollar today continues to strengthen. I've been talking about this. Now you broke the downtrend a couple sessions ago that we've been in since October of this year. And we were in this triangle pattern, which has now resolved, for sure to the upside. And you're definitely now in a series of higher highs, higher lows, now higher highs on the dollar. Dollar's been moving up, strong MACD, strong RSI, daily, weekly, everything looks positive for the dollar. I'm not buying any arguments that the dollar falls, even though it's still technically in a downtrend on the weekly. It's below the 50, below the 21. It's made some significant strides higher, and it is above the 200. And you're back to the 200-day moving average now on the daily. So I think that's all, when it comes down to it, I think that's all fairly positive. Doesn't mean we don't come back down, test it. But right now, the dollar is in a pretty good up move. We're also seeing, and I've been talking about this for days. If you're listening, I've been telling you that yields are moving higher, that they were overdone. You're seeing that continue today. So another pretty good move up on the 10-year yields back to now 41. So we came off the lows at 38. We hit 39, 40. Now we've hit 41. On this. So you're clawing back some of this overdone selling in yields, or drop in yields, which I think was just ridiculously overdone here, and you're starting to pay. So if you really thought your TLT was going to the moon forever, it's not, and you're seeing a pretty decent pullback here. Now this might be an opportunity to get long, or you may get some more downward movement to go. I don't think rates are going to be changing anytime soon, so I think you got to watch it. Now, with the dollar moving up, you're seeing all the FX dropping. 6A dropping decently on the session today. Your Aussie dollar. Now, that being said, you had a decent day today in the British pound, bouncing up and bouncing off the 50-day moving average. If we look at the Canadian dollar, it's held up pretty well today overall. But I mean, the dollar didn't have a gigantic move today either. I mean, it was up bigger, and then it settled well off of its highs. And then on the euro here, bouncing. Is the dollar going to take a little bit of a pause on this up move? If it does, that could be a good sign for some of the Forex. I think Forex are setting themselves up for some great trading opportunities. I think strangles, 112s are really setting themselves up here. So that's where I'll be taking some taking some looks here in the next couple of days as I look to get some new trades on. So oil, what are we in right now in oil? Well, we're still in this sideways consolidation that's getting tighter and tighter and tighter. Overall, you're still in a downtrend. If we look at the weekly, we are still trending down. PSAR is down, but MACD and RSI have been reversing, coming off their lows. You remain below the 21. You remain below the 50. 21 remains below the 50 itself. On the weekly, you're below the 9, which has been a pretty good resistance area. So we'll see if we can break above that. But this good sideways consolidation is really starting to look pretty nice. I think you have some decent support down here around the 60, really the 67, 68 range, and maybe the support line here we tapped on today and then bounced off of this higher. So overall, oil looked kind of ugly early on and then rallied positive by the end of the day. Love what we're seeing in oil here. I think you're also seeing some pretty good volatility in oil. It did drop on the session, but you still have good volatility in oil. I like it. I think oil is one of my favorites to trade. And then in gold here, you've got another pretty good sell-off day. Gold dropping over 1% on the session. Now, we've already broken below yesterday, the 21 and the 9. Today, we broke the 50. So now we're heading down to maybe the 200-day moving average, somewhere around this 1980 mark here. RSI, MACD dropping weekly and daily. So I think this is something that we're going to keep an eye on. I think there's some good weakness in gold. It's been great for us. We actually closed out a gold trade today, and we have some traps hitting. This has been perfect for us. So really loving what we're seeing here. If I take a quick look at copper as well, having a little bit of a down day today, as it's been trading for the most part in this range. Had this breakout back into its range, and it's just been sideways trading in this range. It's up, it's down. Right now, it's down. You've got the 21 heading down, the 200 moving down, the 50s turned over moving down, the 9s moving down. They're all starting to stack up a bit to the downside, and I don't think selling in copper's over. I just don't know that it's going to accelerate at the rate that maybe gold's going to do. So I do like copper, and I think I'll keep an eye on that. And then we talked about bonds and earlier in the day in the session here, and just weekly. Rolling over week, daily, this looking weak. I think bonds could potentially head a bit lower. I think they're setting themselves up for some nice trade opportunities in bonds. The run was too fast, too much. I would expect a nice little pullback here. Let's see what happens. Could we hold the 50 in here, and or this little support area? If we can hold it, great. If not, we'll see what happens. But I'm still going to be bullish for the most part on bonds and bearish on rates. Okay, so there's the futures for the most part. And if we look at nat gas, it's just crazy volatile up and down. There's nothing that makes me want to trade this right now in all of this craziness. We'll see. Can you make money in it? You can, but you got to be willing to stomach some of that risk. All right, sectors on the session. Every sector was down on the day, led by the gold miners, really selling off hard, gapping down again. Semis selling off decently today, down 2.6%. Real estate down, utilities down, oil down, discretionary, consumer discretionary down, the XLY, pharma down, energy down, everything down. Least down is going to be your consumer staples. Consumer staples just hanging in there. Good defensive sector. We'll keep an eye on this. But also financials have been in a bit of a sell-off here. Been in a great bullish move, and everything was stacked and moving higher. But now not only did you break the 9, but you broke the 21. So you've lost both of those moving averages, which now puts you at the 50 next with MACD and RSI. So right now I would call a bearish move on financials. And then if we look at healthcare as well here, you've broken the 9, but you haven't broken the 21. So I think when we're looking at healthcare overall here, it still looks pretty decent. I think it was just oversold, or I'm sorry, overbought a bit, and maybe reversing. The question is, how much does this pull back? Right now, it's still in a bullish move with a pullback. So I think that's what you got to watch. And then if we're looking at the big names out there, Apple down 0.5% today, but bouncing and holding the 200 moving average. I think that's important on Apple as MACD trying to reverse, showing that some of this selling may be overdone. Microsoft fractionally down, still sitting close to new all-time highs. Amazon down 1%, holding the 21 EMA, which is fine. Meta off on the session, or actually up on the session today, fractionally, and it's holding it still above the 9 and well off the 21 and 50. Everything stacked. Meta still looks pretty solid here. Google holding the 9, well above the 21. Nvidia just continues to crank up here. Yeah, a little bit of selling today. It's definitely overbought here. A little pullback would be warranted, but you can come all the way down to 515 on this thing from 560 and still, in my opinion, be pretty bullish on that. Tesla, though, looking like dog doo-doo. So Tesla looks horrific here. It's heading towards lows. However, you're now entering overbought, I'm mixing them all up today, oversold territory. MACD still heading lower, so there's still good momentum to the downside here, and the weekly momentum is definitely to the downside. So I think we could go lower, but we've broken the 3 ATR. We held in there pretty well today, even though we're down 2% on the session, on the day today. You can stay oversold for a period of time, and I think it doesn't look good. And you're heading into earnings, so earnings are coming up out here on the 24th. So we get a week until earnings on Tesla. I don't know where we're heading, but right now you've got the 21 breaking the 50, the 9 just heading lower, pretty straight down. The 9 widening on the 21, the 21 widening on the 50. So this selling is pretty solid to the downside. I would not be risking calling a bottom here on Tesla. Okay, so let's jump into our account on the day. So bear with me. Let's get this account fired up. And let's look at the trade tracker for the day. How did we end up on the session? 498 on Delta. So Delta moved up a bit on the selling. No worries there. Still 0.12, still well below the 0.2 that we want to keep. Theta, 1,082. So really good theta. Again, as volatility increases, our theta is going to jack up a bit too. So 0.26. I like our theta. I like where we are. We hit a new all-time high today, 408,991. So yet another new all-time high. So while the markets have been selling off a bit here, we're doing great. A new all-time high on the net lick. BP, moved up a bit on the selling today. Taking Bill out of the equation, we're at 56.29. I like where our BP is. We've had a little bit of selling the last couple sessions, so a little bit of selling in here for really 2-3 days. Not anything major yet. If we break the 21 tomorrow and selling accelerates, then we'll start to pay a little bit more attention to it. Right now, it's just a nice pullback on SPY, but I think we're positioned well. A couple of days into a little bit of selling as the markets moved lower, a percent or two, and our buying power is right where we want it. We did manage to close on another $965 worth of trades today. We're at 11,078 for the month, and I already went through yesterday how that's dispersed, so I'll cover the closed trades here with you. So what did we do closed trade-wise today? Well, we actually had 4 things that happened. First thing that we did was we spent a little money to put on a long put hedge. So it cost us $175. We made some adjustments to a long-term 112 that for $175 turned it into not a black swan hedge, but pretty much a black swan hedge. So a pretty good size put hedge. Only cost us $175 to do that. Then we made 2 0 DTE trades. We traded the put side for $200, and then we traded the call side for $250. So a nice $450 gain. Just trading small, just putting some trades on, trading our plan on zero DTE. We're doing really, really well on zero DTE, 100% win rate on the year on those. And then we took off a gold strangle today as well. $690 is what we made. We were only in this trade 8 days, but we took 32% out of the trade in 8 days, just like the copper that we closed in 7 days for 31%. I mean, if it's going to give you a 32% return in 8 days, why would I wait for 50% that might take 30 days and keep the risk on? So I freed up my buying power. I took a nice win here. Nothing wrong with 32% in 8 days of training, 9.8, almost a 9.9%, almost a 10% return on the money in 8 days. I think that's fantastic trading. I think this is why we trade strangles out there. You've got a really good win rate on strangles overall. It enhances our gains. And while the market's going maybe down, that's helping us on some of these strangles. We're able to trade a little bit of zero DTE to put some cash in there too. And then we're able to redeploy some of that cash and adjust some of these long-term 112 trades and turn them into long put hedges and some other types of trades. So not only do we have put debit spreads that we have all over the place on there right now, but we've also got lots of long, just naked long puts. I shouldn't say naked, but just plain old long puts just sitting out there. If the market wants to sell off tomorrow, this is the best positioned that we've been for any kind of a sell-off right now. And I like our buying power. So overall, I think we're looking pretty good. I think the one thing I want to make sure that I cover today is just to get into a little philosophy with you guys and share some things. And if you're familiar with The Art of War with Sun Tzu, I'm going to give you a little synopsis of a trading book and a training that I'm doing with our Discord members, and we'll be doing this soon, on how to apply really some of these principles to your trading. And one of the key principles from Sun Tzu is know your enemy. Okay, it's not just about knowing your own capabilities, but also what's the opponent and studying the markets a bit. And in the world of options trading, I think it's all about understanding your risk tolerance, your investment goals, understanding your trading style. So knowing yourself. So it's know yourself and your enemy. Okay, know yourself, know your risks, know your risk tolerance, your investment goals, your trading style. Have your plan and be working your plan. Okay, it's crucial to your success, but that's only part of it. The other part is understanding market conditions and what you're trading. Okay, it's a complete package of knowledge. Okay, if Sun Tzu is facing a numerically superior enemy, he might have avoided maybe direct confrontation, maybe some guerrilla tactics, or undermining the enemy's morale, starving them a bit, capitalizing on his own army's strengths as well before he can take them on. Same thing with options trading here, as we're trading options on futures mostly, making sure that you've got your plan, but also you know what you're trading, know the underlying assets to your trading, know your enemy, which I put some things in the Discord today about just understanding the notional value of what you're trading, understanding how it acts, understanding what can happen to it. Okay, I don't like, if the black swan event would happen, that's what everybody's trading. Black swan hedges, the world is going to end tomorrow. It could. Asteroid could hit tomorrow, nuclear war, something could happen. I'm not saying it won't, and I'm not saying don't plan for it. Okay. I'm saying that you can't run your life by it, number one. And number two, you can't prepare for it. Okay. You can put on whatever you want as far as hedges go and think that, hey, I'm going to do great. I'm going to make $1 million if the market goes down. You're not. Okay. You're going to get absolutely smoked on a gigantic overnight black swan move. You can try to be prepared. Okay. You can buy as many, long out of the money puts that I need binoculars to see. Okay. How if they will even help me. Okay. You're going to panic. You're going to get hit in the face. I use that Mike Tyson quote. Everyone has a plan until they get punched in the mouth. Well, A black swan event is going to punch you right in the mouth. You're going to panic. You're going to start selling and you're going to start taking losses. The key here is to understand what you're trading and what is the biggest opportunity for you to handle any kind of a sell-off or a gain. The reason I go through these charts with you guys is so that you can game plan knowing my enemy. What trades can I put on? Okay. Does it make sense to jump into oil here? Maybe. Does it make sense to jump into any of the FX products? I don't think so. Okay. I think they can go down a little bit more. Okay. Does it make sense to jump into gold here? I don't know. I think gold could be in the middle of a pretty good sell-off. Okay. So I'm knowing my enemy by looking at the charts, understanding how they're working and what's going on. I don't think you need to focus on a ton of news events and get too in-depth on charts. I think you just need to have some ideas. We did a great session today with Candy Recker, one of our moderators here at Income Navigator, and she did an entire session on market profile and some really advanced charting, but giving yourself the opportunity to understand what you're trading and knowing your enemy and knowing what underlyings you could potentially be jumping into. Another piece here from Sun Tzu is the importance of strategy over tactics. Okay. The big picture, the strategy was always more important than short-term tactics. Okay. You believe that winning a war was not about winning every battle, but about winning the war itself through superior strategy. Right? So it's careful planning, campaigns, and so forth. How is this a gold nugget of wisdom really for options traders? Just we're talking about developing a good trading plan with clear goals and sticking to it. Okay? So you got to stick to your plan no matter what happens in the market. And don't get swayed by day-to-day market drama. Stick to your plan. News is noise. Stay off CNBC. Okay? Stay off Twitter. Okay? Ignore all of those outside. Stay off Facebook. Stay off of all that crap. Okay? Yeah, I'm on YouTube. Stay away. Okay? Okay? Don't listen to all the noise that's out there. From all of these gurus, furus, news people. It doesn't really matter. Okay? It's a lot of noise. Don't let little pieces of news, because news is noise, and all it's going to do is start to create some doubt in what you're doing or some fear in what you're doing, and it's going to change your tactics. Okay, don't change your day-to-day tactics. Stick with your strategy. Okay, last piece here. I'm going to wrap up so I don't get too carried away. Is one of the philosophies, and there's more. I'll relate more of these to you. One of the coolest ideas from Sun Tzu, in my opinion, was winning battles with minimal conflict. Okay, winning without fighting. Okay, I think it's perhaps his most famous principle. He advocated winning battles with minimal conflict. It could be psychological warfare, espionage, using diplomacy to weaken the enemy before a physical battle. Okay, sending spies to spread misinformation, getting discord, confusion. Okay, winning without fighting. So when you're trading, okay, it's about making gains while keeping your risk low. And a good way to do this is by using risk management strategies like hedging. So make sure you're hedged. Okay, it's a good way to win without fighting. Okay, also you don't have to put trades on every single day. You can win without fighting. Okay? I didn't put a new trade on today. But yet, well, I did put 2 0DTE trades on, but that's a kind of an intraday move. I didn't make any strategic decisions today out there, but yet we hit a new all-time high in our account. So we're sticking to our plan. We can win without fighting. I don't need to day trade. I don't need to have 9,000 positions on. I can have a plan that makes sense, okay? And I can focus on being prepared and cautious in what I'm doing, okay, and following that trade plan. And you don't need to have to put a trade plan or trade on every single day. All right, I hope this was helpful to you. A little bit of insight there on an upcoming course I'm doing, an upcoming ebook on how to apply Sun Tzu's principles to trading. So it's really the art of trading, like the art of war, and having a mindset, stealing your mind, being mentally prepared, being prepared on paper with a trade plan, making sure you're ready for any occasion, and tune out the noise. It's tough, man. When you're in a Discord or multiple Discord channels, man, there are people posting stuff everywhere that if you don't really know any better, you're going to get swayed. You're going to get FOMO. You're going to get swayed. Someone's going to say, well, this is what I'm doing. Well, if he's doing that, I should do it. Okay. If he's doing this, I should do that. Okay. They may not have the same risk tolerance. They may not have the same account size as you. They may not have a strategic plan at all. They may have no idea what they're doing, but yet you're going to listen to them because they had a couple wins or something. I can't stand seeing posts about daily wins if you didn't post your strategy. All it does is create noise, confusion, FOMO within the ranks. Put yourself in a room where you're not the smartest person, with really good, sound people that have a plan and are really good, sound traders. Okay, that's what you want to do. All right, I hope this was helpful to you. If you like this, okay, go ahead and click the like button, comment below. More than happy to read your comments. We'll respond to as many as I can. I can't get to them all the time. We have a lot going on here, but if you like this, click the like button, subscribe if you're not a subscriber here. And if you want to check out what we're doing in the Discord, there's a link down below with the code KING to take $50 off the first month of memberships. You can get in, see what we're doing, start to build your plan, start to build your strategy, and start to build a steel mindset that's going to keep you from getting into too much trouble. All right, everybody take care. Have a safe evening. Stay warm out there, everybody. And we'll see you in trading tomorrow. Take care. Bye-bye.